when I started my bakery, we did over $1 million in sales in the first year. But what really matters is what you end up with, after paying for everything. And so here I'm going to give you guys a full breakdown: my sales, my expenses, and my net profits. And I wish this kind of information was available for me when I was planning things out. It was kind of hard to find anything genuine or authentic or transparent. And so here, I hope it can help you. And if you like the transparency, please like and subscribe and comment for more. All right, so this is our statement of earnings or income statement. This shows our revenue or sales minus all our expenses and what we end up with, which is our profit at the end of the year. Just for context, before we start going through each item here, we are a fast casual bakery. So that's kind of like a Starbucks where you are a takeout counter mainly, and you have some seats. We have about 10 seats, but there's no servers or service for cleaning up or delivering your food. We are in a major Canadian city. We are not in downtown, but we are in a transit hub, or we're close to a transit hub. So that would be like a subway or SkyTrain kind of equivalent. Um, our space is about 4,000 square feet. Um, Most of it's production, so about 800 square feet, or roughly the size of like a one-bedroom condo, is for our front-facing side. So for our customers, that's where we display our products. That's where our point of sales are. Also, important thing to note is this is for 1 year, but we didn't really open until November in 2016. So this really captures 10 years of sales, or 10 years of being open. I mean, sorry, 10 months of being open. Um, and so there probably is a little bit higher expenses than normal for setting up, but also less sales in this, right? Okay, so let's just jump into it. Revenue, sales, $1.1 million. So, which is amazing. We did seven figures. But again, that's just revenue. We have to pay for everything. Our sales is primarily just in store. We do a little bit of third party delivery services, and I'll go into that a little bit later. Cost of goods sold. So that's how much it costs to produce your product. So, um, for example, this would be bread. Sorry, to produce like the bread and pastries, you need to pay for milk, sugar, butter, flour, any other kind of products. I don't know, raisins, chocolate chips, that kind of stuff. Um, so our cost of producing all that was $275,000, right? So that's about 25%. So our food cost is about 25%, right? So we have gross margins here, and that's really just sales minus cost of goods sold. And that's just what you have left over after paying for the ingredients or paying for the food. So we have $822,000 to pay for all of our expenses, and then whatever's left over would be our profit. Right? Expenses. So we'll just go line by line for um, whatever's important. Accounting and other professionals. So there's accountant, but also legal fees just for setting a company up and registering your name and all that kind of stuff. Amortization, I'll get back to that. Bank charges and interest. That would be mainly credit card fees. So, you get, we use a Moneris, and that's kind of what we have. I mean, that's what it would cost us. So it's about roughly 1% of our sales, which doesn't sound bad. Um, but 10 years ago, more people used cash, and so nowadays, obviously, there's no fees on cash, but nowadays there's a lot more or there's a lot more usage of credit cards and tapping and all that kind of stuff. So um, the fees have gone up. Um, Delivery and postage. Delivery and postage. This is where the third party fees are included. So we use Skip the Dishes here initially. This is similar to Uber Eats or DoorDash. Um, we didn't have Uber Eats or DoorDash at that time, but the fee structure is and the service is exactly the same. So that's kind of like a lot of this is the cost of delivering food. And this was only for about maybe 6 months of this year. We didn't start it right when we opened. But we have since moved onto Uber Eats and DoorDash, and we phased out of Skip the Dishes, and we've done a lot better with Uber Eats and DoorDash, right? So, if you want to see more about that, then just comment and let me know, and I can work on something on that. Employee benefits. I was trying to start a company that I could be proud of, and one of the important things was to provide benefits. I know it might not be something that people do right off the bat for a retail for something like this, but we tried our best to treat our employees well, and I still have a lot of employees from that first year or two. Um, so, we've definitely grown this over the years, but it's worth every penny, right? Insurance. This is for business insurance as well as building insurance, which the building insurance I'll go into when we talk about rent. Meals and entertainment. This would be Christmas parties, or you take everyone out for a barbecue or a beer or whatever, or go bowling. Um, Property taxes. I will go over this with rent a little bit later. Repairs and maintenance. We definitely did not have so much repairs and maintenance. I think this is just paying for technicians and handymen and people to install things since we were getting set up. And I think a lot of that just got included in this category. So a lot of this, I believe, is setup cost, right? Rent and storage. So rent, this is the base rent. So this is what we paid for, maybe it might be 9 months or so of the year, because we got a couple of months free um, for renovating the place, right? So oftentimes when you're a commercial tenant and you sign a long-term lease, if you um, renovate the space, usually you're improving the building. So if you negotiate with the landlord that, hey, you're putting whatever $100,000 into your property to fix it up, they might give you, you might negotiate and they'll give you a couple months free, right? So you can kind of work on that. So, um, but this rent also for commercial tenants, this is understated. So we actually paid way more for rent. Um, and it's understated because commercial tenants usually pay, they call it triple net, like, I don't know, triple net tenancy or whatever it's called. But basically, you have to pay not only the base rent, you have to pay property taxes for the building, you have to pay insurance for the building, for the maintenance of the building. So property taxes, insurance for the building, and maintenance for the building. And that's triple net. And so it's actually quite a bit higher than this 60,000. So it's 60,000 plus, another 20,000 here, plus some maintenance in here, plus building insurance. It's probably closer to maybe $90,000. And that's for maybe just 9 months of rent, right? So pretty high, 90,000. That would be about maybe a roughly 9% of our sales. Supplies. Supplies would be like, bakery boxes, or paper cups and paper straws and plastic bags and paper bags and all that kind of stuff, right? Um, so that's, garbage bags. all sorts of stuff. So that adds up. Telephone and utilities. So this would be like my cell phone, which was actually a very tiny part of this, but the the landlines. You have landlines for the business, but the biggest part here would be the actual utilities. So heating, a space like that all the time, or cooling it all the time for your customers and your staff is really expensive, right? Our heating and electric costs are thousands every month. And so, and it's required, and not just for your customers, but for your kitchen. You can't have a piping hot kitchen, or like a freezing cold kitchen, because your product is not going to sit well in those different environments, right? You kind of want some consistency when you're working with dough. That's very sensitive to temperature. And wages and salary, $461,000, right? So that is a huge amount. I mean, that is, we brought in 1.1, and we ended up with 461,000 in wages and salaries, and that does not include my own salary. I didn't pay myself for at least 2 years. I think 2 to 3 years, somewhere around there, I started paying myself, right? Because there was enough money. But at this point, I just kind of kept everything inside, because you never know what happens. It never felt really steady. And so you always wanted money in the business. But this also is a little bit higher in a sense, because, yes, we're inefficient. Everyone was new. I was training everyone. And before we actually open in November, you have to bring people in and start training them, and you're not bringing any money during that month that you're training them, right? Um, so there's a lot of waste here, and there's a lot of people that come in and out, and probably, as a new owner, I was probably not very effective in some ways of choosing the right staff either. So a lot of inefficiencies in the first year, but that's 45% of our sales, which is massive. So what did all our expenses end up reaching, right? So all of our expenses ended up at $762,000, right? So 822,000, um, and we spent 762,000. Now, one caveat here, and which is a massive caveat, we there is no inclusion here of the cost of setting up this business, right? Like, yes, there's some smaller fees, but in terms of equipment and renovations, it is not in here, right? So amortization here is really, it is our equipment that we had to purchase, and I think, just a ballpark figure off the top of my head, I think it was about 300,000 ish for equipment, and and you don't write $300,000 in 1 year and expense it out in terms of accounting. What happens is, they take, for example, 300,000, and they stretch it out for the lifetime of that equipment. So I don't know what it is, but let's say it's 10 years. That would be like $30,000 a year that they would let you kind of expense out. So it doesn't include that initial cost of buying the equipment and doing some major renovations, right? Some of that is not really included in here. Anyways, so what did we end up with? We ended up with a net earnings of $60,000 after of our expenses. So after our food costs, after all our labor and all our supplies and all that kind of stuff, we end up with $60,000, right? And again, I didn't pay myself. This does not include some of the major lump sums that were initially put in here, but they will, be taken out over time through amortizations. So, really, we didn't make any money the first year. I'm happy to have some, what like a positive start in a way. A lot of times you're not expected to make money, and I think this is a real life scenario where we're not making money. On paper, maybe we made a little bit, but like I said, we've been around for 10 years now, and we've definitely improved in a lot of ways, um, across the board here, and so this is about a 5% net profit, which probably isn't healthy, and probably why I was working 16 hours a day for most of this year. It was not a fun year. I had a lot of questions about whether this was the right move, but it's easy to kind of look back and kind of see that this was just part of the process, right? So, anyways, I hope that helped. If you guys have anything you want me to deep dive on, or talk more about, or maybe show you other things from more current years. Again, this is from about 9 years ago, so inflation and all that kind of stuff probably has crept up, and things might cost a bit more. But this is kind of what it costed me to start my business, and I hope that helps you guys, because when I started it, it was hard to find kind of really authentic and genuine numbers that I could trust, and so I'm just kind of paying it forward, and this is you guys can use this, and hopefully plan your business a little bit better. So yeah, that was year one. It was far from glamorous, but I think it was a necessary experience, and just part of the process. If you like the transparency, if you want to see more numbers, like and subscribe. If there's something you want me to deep dive on, something you want me to talk about, leave a comment below, and I'll try to work on a video for that. Thanks for watching, and I will see you in the next one.